update, and it pushed it through, and it forced everybody to do it, and I didn't know we were getting it. So I apologize for the minor delay there, but I guess Oliver's having the same issue trying to get his update to push through. Um, I wish they would do these things over the weekend for us so we could be ready. But anyway, so what I got to do here, guys, let me figure out how to get the camera launched on this new one. Give me just 1 second. Market's not doing much at the open here, kind of flat into, Friday was range bound. Here we go. Looks like this camera function is going to happen. Same as the old one. All right, we got that figured out there. Camera's good. All right, guys, JPM, possible whole number trade here at the open. Look for that off 97. Micron, no, AMD, you think? Let's see, AMD. Yeah, it had that ridiculous day. Followed through on it. It's possible we have all-time highs here, right? So there is no resistance. It's a little extended from the 20, wide bar, but off of a gap. I'd be hesitant to chase that. I'd like to see a little more conviction on it. Guys, the whole number trade on JP, we got our scalp target already, 30 cents. Book some profit on that. Leave the break even in at 97. If we do break down, there's not a lot of room, right? You got that hourly 200 there. So the short under the low, I don't like as much because we're going to hit support at the hourly. So if it does break back on our 97, I say we let it go. Look for a retest off that flat 200, right? Market has been, was sideways on Friday, right? We had a range bound spies. You can see it here, equal pivot lows, equal pivot highs. If we get above 322 and hold, then we can look for the rally up to 323 where we run into the 15-minute 200. Okay. So if we can get above 322, break out of the range, good. If not, we're still sideways. So this would be support at the bottom, playoff support. This would be resistance up at the top. So JP stopped out at 97 on a scratch. Now look for the hourly 200 play and do it again. Look for a bounce off of that 200 if we get it. If we get a break and hold underneath the hourly 200 and we can take out that daily, we can look for continuation down. Okay. So I know it's a big bar and you want to short those. I just want to make sure we're through the pivot, through the 200. We get caught underneath, then we can follow through in the short. Pretty wide open until we hit that daily 20. All right. If we get a snap back through the 200, you don't want to get caught on the short. You play the stop and reverse for the long. And those are the kind of bounces we like. People get caught, right? It's like a little bear trap there. It looks like on your 5 minute, you don't see anything, right? You just see igniting bar and it's going to fall apart. And then on the bigger time frame, you see some pretty good support. And a lot of people can get caught trying to short those igniting bars early, and then you get the whip back. So if we get stopped out break evens or better, we're good. If it can get caught under that 200 and then break down again, then we can look for a short sign. All right, Facebook igniting bar starting to form. Room up to 233. Pivots at 233.50. So it looks like we got about $1 of potential follow through on Facebook if we take out the 5 minute high, provided this stays in here. If you want to do the 2 minute, we're working on like a ribby play right now. Right, that 2 minutes going to set up a little. If it can set up a little give back bar inside this igniting bar, we can do a little 2 minute ribby play. Look for that move to continue on Facebook. Yeah, the other banks are showing the same thing. So we're getting igniting bars on the banks. I just want to get the follow through to confirm because the market's not really selling off much. So if we get the if we get that bear trap bar going, like Wells Fargo, right? Big bar, but now it's in the Haas, in the support. So I don't want to chase these as shorts until we get a little more confirmation, right? Because the market's just not really making that big of a move. And that's where you can get caught in the whip. Get the hard move down, then it whips back the other way. Yeah, what else we got? So our market bar's done, right? We're gonna have to take out that high if we want to go long. Really over 322 opens it up. If we're gonna chop around between these two pivots, it's not much momentum trading in there. You don't want to get chopped up in a range. So you want to wait till you get to the key pivot lows or the key pivot highs, right? Whichever one we can get to, we can play a break above or below, or we can play the rejection of either pivot. There's our Facebook. That's going to go. Remember, we were working on that 2-minute ribby. We said we have room up to this pivot, 234 and change. Let's see if that can hold. 5-minute high, not quite. We got to get through that 233. You see the AMD pullback, right? We didn't want to chase that off the open, a little extended right there. So there's your 5-minute bar. Now, if you hold inside that 5-minute bar and put in a ribby and break the high or get like a gift play or something in here, I mean, you can look at it. I just have a hard time when we're that far from the 20. It's tough to want to chase those long, right? So it's strong. I wouldn't short it. I wouldn't try to pick on it. It's at all-time highs. You have zero resistance when you're at an all-time high. Okay, so if it stays quiet up in here and then breaks above that 5-minute high at 10 o'clock and we consolidate and break out, I would play it. If it does it on the very next bar, I don't know. I don't think I want to chase that one. Gold stocks gapped up. Same thing, man. We're way up there, right? That's not the time for me to go long. We've gapped and gapped and gapped and gapped. It's 5 days in a row of gaps, right? So I don't want to chase those. Strong, but I want to chase them. All right, guys, we got the break of the low in JP after we got trapped under the 200, right? So we said earlier we don't want to short too soon. Wait till we get under that 200. And this is what we call the give back bar. I know we might have some new people watching, right? So the give back bar is you get the igniting bar, but you don't want to dive in short when you have support. Then the next bar retraces or gives back a little bit of it and then breaks the low, which clears your support. That's your short trigger. We're getting close to 96. That'll be a good target. Put the break even in on the short, or because we're at that daily 20 as well. So if this holds up and it can't break through, then we want to be break even again, just like we did on the long. We get to 96, great little target, book some. And then if it holds 96, we'll stop and reverse off 96. Okay, Facebook doing pretty good on the follow through. Here we go. If we can get through the pivot, we're wide open to that 5-minute 200, guys. So remember, same thing on Facebook. We were playing that little 2-minute ribby play. I see the same move on the upside. There's a big green bar. There's the little give back inside the bar, breaks the high. That gives you a nice small risk reward. Great rocket to the upside. See if we make it all the way to 5-minute 200 would be great. Follow through there. So break even on that. All right, if that follows through, first profit target out, break evens in. Disney, thank you. You're welcome. Oh no, JP, thank you. Yes, you're welcome. Disney, what do we got with Disney? Disney, yeah, I like that 5-minute bar, hits the pivot, little bounce up, and then takes out the low at the same time it breaks the pivot. That's a great little short, and look, support's all the way down there at 116. So you had a nice 50-cent drop before you were going to touch support. So it's a good target on the first short. If it can break under and hold, you get more. If not, bounce off 116, you can play for the reversal. So good first target. See if that 200 is going to hold for you. JP trying to get all the way down there. Let's see if we can get it. All the way. We got a nice little narrow bar, so we can break that low. If we take out the high of the narrow bar, it's going to come back up to 50, and that's pretty much where you're going to be break even anyway. See that? If we get no follow through on that narrow bar, you want to take that trade right back off. You want to aggressively scalp, flip it back through 50. Facebook still grinding. Hopefully that makes it all the way to the 200 for us. No, Cesar, you want it to break the bar. I'll go over it a little bit more in detail when it slows down a bit. To show you're basically creating, you're trying to create a GBI or an RBI in case it doesn't close, right? That's what we're trying to do. So we look at an igniting bar and we say, hey, wouldn't it be great? Like right here on Facebook, right? You got this igniting bar on the 5-minute. We're almost there, guys. 5-minute 200 coming up. It's a big trade. And I'm going to show you why right there by playing that give back bar. Market held up on the 20. Nice bounce there. JP back through 50. That thing looks pretty good. I think we're going to get a nice bounce on that. So Facebook almost to a second target here. Make sure that you are taking advantage of this move. Lovely move that it is. I would say bring the stop up underneath 234. If you don't want to take it right into the 200, if you want to give it a chance to break, make sure you get your stop up there. But you know me, I like to book profits when I have them. So we'll be booking some. But see that 5-minute bar is right here, Cesar, right? I would love to know that the next 5-minute bar would give me a ribby, right? A small red bar that stays in the upper part of this bar would be great. It would be an easy trade. But what happens if the next bar starts trading, trades down a little bit, and then starts to take off and breaks over the high? There's a chance it's going to be a second big green bar, and I'm not going to get the ribby. So the give back is it starts to form, pull back. Now I'm hoping that it stays in there nice and quiet. Gives me the red bar. The minute it breaks over the high, I take the trade with a stop under the low, and that creates, in effect, a small risk or a small bar. And then that's the result. So the entry you get here with the stop here, instead of waiting for the ribby and saying, oh, I missed it. Your other option is simply play this 5-minute high, put a stop under that 5-minute low. You can do that. It's fine. But with a target, if the target is at 200, which one's going to give me better bang for the buck? That little stop or the big stop, right? So I like to take the concept of the igniting bar and then try to tweak it to generate a big leverage on my risk reward. You can just stick with the 5-minute bar to start, right? It's a little more of an advanced play. There we go, guys. Full target Facebook. Thank you very much. All right, JPM whipping around a little bit here. So 1 scalp, 2 break evens on JP. Can't seem to get this one timed up right. If we get back down to 96, let's try another long down there. I'm not going to chase it short at this point. Already got trailed out. So 1 scalp long, break even stop, short stop, trailed out, flip through 50, and then scratched out on that. Facebook has been beautiful, like textbook stuff. So when the trades work, we want to ride them. When they don't, we cut them quick. Simple as that. They don't all work. They will never all work. So your job, pick out the ones that are working, let them go. Find the ones that are not, get rid of them. Apple, 5-minute ribby potential on Apple. See it? Igniting bar above the 200, little narrow bar. Let's see if we can get some love on Apple. Wells Fargo, yeah, it's kind of stuck under Haas. Didn't quite get to the whole number. If it gets back above 70, maybe get a little bounce on that. Or if we get stuck under Haas and then we break the low and the banks stay weak, we could look for it down to 25. Not a bad short there. 2-minute sell trying to form. Right, if we can break that low off the 2-minute short and get like a 5-minute pause in the bottom of this bar and break that low, we could go for 25. Hard for me to short the banks from the market. If the SPYs are rallying, though, it's hard to short banks. That makes sense. All right, guys, beautiful play here. Apple's starting to work. Beautiful setup. It's a good trigger. We got a 2-minute ribby on top of a 5-minute ribby. We got ribbies everywhere. So let's stick our 5 minute break even in and see if we can catch fire here. The sucker going a little bit. What about PayPal? What about PayPal? Now, Zach, here's the deal. When you're trading a 2 minute chart only, it can be a little deceptive. Sometimes you're going to run into some bad breaks. If you're only looking at a two and that's it, it's okay. But realize that some trades are going to get rejected and you're not going to maybe know why until you go back after the fact. So on the 2 minute, you say, yeah, look, that pulled back and I have a reversal. Green took out red. I want to do it. Okay. If I look up at the five, I got a 5 minute 200 right above me. If I look at the 15, I got a 15 minute 200 right above me. If I look at the hourly, I have a declining 20 right above me. So when I see all that at the same location, then that 2 minute buy, I kind of hesitate. Right now, once we're over 175, then all that stuff's broken and you got a good chance for a nice follow through. Market holding up, guys. So remember, I said if we get over 322, fairly open to make a run. So let's see if we can get that to happen. If not, we can play the rejection of the pivot and the whole number. So if it can't break it, you can see it a little cleaner on the 15, I think. There's your high, 321.99. See it right there? So if we can get over that, get over the pivot and the round figure, the whole number, it's pretty open for a run, which should help the banks too. If we get rejected, we try to break through by a couple cents and then fail. We're continuing on with this sideways range from Friday, and then we can just fade the market off the top there. Uh, uh, uh. And if the market breaks that, it should pull the banks with it. Now, it's not breaking down much. So, for JP, you either got to get down to 96, stretch this out, or we're going to have to, if it goes sideways, let that 8 catch up. And if the sell setup fails and you can slide past the 8, get back through the 200, you probably get a recovery bounce because that means the daily 20 is holding and you should get a kick up with the market rallies. If the market hits the pivot and fails, and this stays in the lower third and breaks down, we should get it down to 96. So right in here, I don't like either play. I think it's too tough in here. You need to break that low and look for short, or break back over that 200 and then look for a counter. And preferably once the eight's down on top of it. If we rally hard before the eight gets there, we have enough room, we could go challenge it and still take the trade. But the longer it stays here and the eight starts getting closer, then you're going to want to let it get past before you try your trigger. I'd see if we get a whole number break of spies or rejection for short. We can do either side of this trade. We can do both. You can take it long, and then if it fails, stop and reverse it short if you want. So 2 minute low is 86. So if that 2 minute bar fails, so there's the break of the number trying to break out. Got a long going. If we lose that 2 minute bar, you can stop and reverse. We get up to 10, 12 cents. Probably could go break even on it on the long. If you want to be aggressive on your stop and reverse, do it right back through 322. If you just want to put in a break even. We got the 10-cent break of the number, should be enough to hold it up. And Xilinx having a good day. It's a little spready. Just be careful with that one. Seems to be the standout of the chip sector at the moment. But 5 bars up, not the time you generally want to buy something. Let it pause. Let it come back in. Set up for the next buy setup. Wells Fargo triggered that sell setup. See if that can come all the way down to 25. If it can't follow through, I don't know if I'd give it a whole lot of room. And that's a pretty good look. That should go. If it does not follow through, comes back up to say 50. Let's say cut it loose. Stop and reverse is it's kind of like JP, where the market's strong. Um, the bank should get the lift, not the short. So market holds, I'd say back off that, or if you did it, take it off right away. Look for the reversal. Market holding nicely here. There's 30 cents, guys. I'm going to take a scalp target on that, and we're just going to let it go. See if it can have a nice move. Maybe get 1 or 2 more bars up in the 10 o'clock. 1 bar through. Pretty good put. It's enough to say we should not lose this 5-minute bar. Right. And then we'll just try to ride it out. See how much of a follow-through push we get. You missed a lot of the initial move. Well, it depends on the setup. I wouldn't say it's a general statement. You're going to miss the move on a 5-minute. I trade the 5-minute all day long. So if you want to trade the 2-minute, that's fine. But I like trading a 2 with a 5 so you can kind of see if there's any conflicts. But if you want to just trade the 2, just understand that sometimes when you do that, you're going to go straight into something that you're not seeing on a bigger time frame, right? And if those get rejected, then you just live with it. Right? I like to have multiples just so I can see. All I'm looking for is that there's not a clear violation of what I'm trying to do, right? Like on that PayPal trade. I just don't want to be trying to buy something on a 2 that is smack into resistance on the 5 or the 15. That's all. As long as I have some opening, that's good. All right, guys, market, nice rally. Remember what I told you, if the market rallies, it's going to pull the banks with it, right? So we just looked at Wellesley and said, take that off and maybe you can go the other way. JP, told you once it got back above that 200 on the hourly, we'd be good, which means the daily 20 held. So there's our reversal on JP. Now you don't want to get caught. Looks bearish there, right? And we tried it even. But as soon as we had 0 follow through, we bail on the bearishness. And then we just wait for confirmation that it's not going down. And then we can try the little reverse. No, now if that can't get over 97 and it hits the 8 right here and rolls back, then again, you got to get out of that long. And sometimes the market does this to you. Whips you around, doesn't give you the clean follow through. the market itself is giving us great follow through. We're up to 50 cents with no problem, right? So this is a good example of the trades that work well. You ride them. The ones that aren't, you cut them quick. You don't hesitate, right? Hesitating and waiting and wishing and hoping and praying, and that leads to nothing good. American Express getting extended. I don't see that. Let me take a look. Oh, I don't think it is. Extended? No. Which direction? Oh, AEP. I'm sorry. I'm looking. I'm so used to seeing American Express. AEP. American Electric. Yeah, a little bit. Remember, coming out of a base, hard to get climactic, but that is extended. Yeah, so we could look for a counter move here on AEP. All right, look for your first 2-minute bar takeout. Right, 2 minutes powering down pretty good. But that is a pretty good stretch. Got a little bit of a spread here, but then you could look for a reversal bounce on it. Even though it's not, remember the rules, guys. Out of a base, it's easy to get away from the 200. I mean, from the 20, right? Out of a base. If something is trending, right? If we're trending, and then accelerate, that's more climactic. When it's out of a base, it's easy to separate. Look, the 20's not moving here. It's flat, right? 20's flat, just sitting there. And then all of a sudden, price gaps and takes off and leaves the 20 behind. Like, well, wait a minute. I wasn't ready for this race here. When your 20's trending, and then you can leave it behind, that's your climactics. All right, so this is a little extended. Definitely don't want to short that far down. Look for a bounce. Should get a 1/3 retracement, and that's not bad for a counter move. Our market long is doing fantastic. Again, all started with see this 2-minute ribby? So in the beginning, when I talked, don't worry about Donald. Don't worry about news. Who cares why? Ask why after. Trade what you see. We talked about that give back bar on the 5-minute this morning, and I said ideally you would love to see a closed 2-minute narrow bar or a 5-minute narrow bar inside the upper third. This is ideally what you want to see. But what if this bar starts to form and then rips to the upside and you don't get it? Then you miss it, right? But that's a textbook looking ribby play right there. That's beautiful. And look at what the move that followed was. Pretty status quo. Trying to rally it as far as we can. Ride the winners as far as we can ride them. So let's go 5-minute trail. Put in that stop under that low. GP had a pretty good little bounce. Hit the 8. We'll see if it's going to roll over as the market gets a little tired. All right, it's trying to get all the way back up to the whole number. Trying to do a little sell. If we catch a sell that does not trigger, right, and we break through that 8, we're going to keep going to the upside. And we're going to keep riding it up to the upside. So it may have taken 2 or 3 tries to get this one on which side. That's the importance of being tight with your stops. You can afford to be wrong. You cannot afford to stay wrong, right? Do not stay wrong. Be wrong, get out quick. If you're right, stay in. Sometimes traders get a winner, then they bail on it too quick. It's like you're winning. It's working. Why are you getting out? There's no bar by bar break. There's no pullback. Just let it go. On the losing trade, get more in tune with I got to get out. For some reason, as traders, we like to hold on and hope that that loser turns around. The winner's doing everything it should, and then we bail on it. Good job doing exactly what I said. I'm out of here. Like, imagine how confused your kids would be, right? If the kids were doing everything you said, all right, listen, I need you to clean your room, put the dishes in the dishwasher, do this, do that, and they came in and said, all right, did everything, and you said, all right, go to your room. They would look at you like, what? Go to your room. But I did everything I was supposed to. I don't understand what's happening right now. And then when they were misbehaving, you come home, they're coloring on the walls with marker, drawing pictures and painting your wall, and you look at that and you're like, Hopefully they'll stop. I'll just give them another 10 minutes and they looked at you waiting for you to yell at them and you didn't yell at them and you just walked out of the room, what do you think they're going to do? They're going to keep painting on the walls. They're going to keep doing everything they're not supposed to do because you're not stopping them, right? It would be very confusing behavior for your kids. They wouldn't know what to do with it. But you're doing the same thing with your stocks. When you have a great trade and then you jump out of it for no reason, you're punishing good behavior. And when the stock's not doing what it should, you just allow it to keep going against you and adding to it and hoping it stops taking your money away. That doesn't make sense either, does it? But we do some strange things as traders in the beginning. Like we have to relearn how to think when we're trading. The reason we want to do it different than we would do in our normal environment. Well, Andrew, what happens in a losing trade? Heart doesn't pound in a losing trade? You don't care about losses, doesn't bother you, and just cool as a cucumber in a losing trade? I'm only asking to try to figure out what the difference is. Okay, so you're ready to take the stop. Okay, so on the winning trade, then why aren't you just ready to take the target? Should be the same thing. All right, trade's working. I'm ready to take the target up here. When it gets there, I'll take it. Trade's not working. I'm ready to take the stop down here if it doesn't work. So what are you doing different in your thought process when it's working? Why aren't you just sitting? And I'm not saying it's easy, trying to get you to think it through. I'm trying to get you to understand why you're doing it so you can stop doing it. Okay, there's that JPM trigger off the 5 minutes. So this little scalp long, done, out. Market, got a little 5 bar run, probably going to pull back. Bank's going into a sell mode. It's 10 o'clock. So that first 30 minutes of, all that built up order flow that comes in every morning, we're kind of through with that. So we'll see if we're going to get any secondary catalyst, if we're going to slow down a bit. So 2 minute bar by bar trailed out, 5 minute bar by bar, not quite trailed out. A little bit more room there to maybe get to Haas if it can squeeze up, but if it breaks those bars, I say we take the early trail. If you want to leave part on for a pivot, that's up to you. I'm going to book the early morning stuff and look for the next round of trades to set up. Oh, snap. Let's see. Snap. What do you want to do with it? Doesn't seem to be doing much here. Well, you had a good start. That looked good, and then it just stopped on you. So kind of chopping around above that 200. Your AEP here, you're still trailing 5 minutes, 5 minutes. You haven't had a break yet, right? Still going, still going, still going. We get to 81, we could try an early one. We didn't get a 5 minute trigger yet. Could do an 81 whole number trade. Stretched out of them. Want to take a shot on that? So down and
Wow,
through at
that's a
81.
nice little run there, Dan, in the AEP.
OV. All right, taking over.
Yeah.
Take a jump off here. The jump off.
OB in the house. In the house. Oh yeah. How are you guys doing? How are you guys doing here? You guys doing okay? Guys, shoot. Actually, man, I took a loss here today, man, in the GLD. You see that? Let me get you guys up here. Let me see if I can shrink this. Bring you guys here. I don't know how this thing works here today. Our Novia system had like a new download. I had some difficulty logging on with this new download this morning. Sorry for being a little bit late, but I actually took 2 plays today. If you see down here, let me get my pen up here so I can mark things up for you. As you can see here, I took a loss for about $1,800 in GLD. Nice trade in Facebook, and let me just cover this for you. Remember I'm constantly reminding you traders that your best trades, right? Dan, you did Facebook today too? Awesome. Your best trade I call a narrow state. All right? Now, remember what a narrow state is. It's when your 3 items are close together. What are those 3 items? All right, it's simple. You've got the 20-period moving average. See the blue line here? You've got the 200-period moving average. And then you've got the price of the stock, the stock itself. All 3 items are tight together. See that tight together? That's a narrow state. Okay? When all of your 3 items are wide apart, you have a wide state. Okay? Very simple. So your best trades are going to come out of a narrow state. Okay? So this neutral bar and the takeout of the neutral bar is a beautiful play out of the narrow state. You're coming out of the narrow state. Now remember that markets go from narrow states to wide states and back to narrow states, right? It's from these states, whether it comes from out of the narrow state up or out of the narrow state down is not important. Just coming out of that narrow state. So in the morning, you want to isolate. Let's say you've got 10 stocks. You want to isolate 5 minutes before the market opens. Which one of my stocks have narrow states? And you want to pull those out of your list, right? Which stocks have, this is before the market opens, the 200, the 20-period moving average and the stock, they're all together. That's a narrow state scenario. So you want to have that isolated before the market opens, right? Okay? And another thing, it doesn't matter if the stock gaps up. It's gapping up from a narrow state. This gap up here can still run. You understand? It's not the gap. It can still run because the gap is born from a narrow state. It's very important to understand that. Okay? Here, take a look at PayPal uh, today. Look, it had a rough start, all right, this morning, but the narrow state, all right, this is your narrow state here, and it can flow from that narrow state. You understand? Now, let's cover my loss, my losing trade here. Um, I could have done better with this, guys, to be honest with you. But I tried it. All right, I gave it a try. I gave it a shot. It didn't work. All right, everything's not going to work. All right, but let me get it up here. GLD, right? So, guys, I tried to go short this. I went short. I gave it a shot. In retrospect, and I stopped out with a 2-bar stop out here. I took a 2-bar stop, not a 1-bar stop. All right. And you have to determine whether or not a 1-bar or a 2-bar stop works for you better. I decided to take a 2-bar stop because of the round number 182, right? So I didn't want to stop out with the 1-bar stop and not give my round number an opportunity to knock this back down, right? But okay, I just came out on the 2nd bar, all right, and took a $1,900 loss, more or less. But uh, in retrospect, I should have waited to see if this was going to confirm the negativity of the first bar. I didn't. I jumped into the first bar toward the end just because of the solidity of the bar. The bar is fairly very solid negative bar, right? There it is. And it's so far away. You guys know my space concept, right? So if this bar is down here, I'm not doing that because it's too close to support, okay? But way up here, right? I'm thinking that all the people who own this from Friday, they're going to be profit taking. This is going to drop, all right? I know that if I owned GLD from Friday, I'm selling today on this big giant gap up, all right? And that first bar suggested that selling was coming into the play. So I took a shot. I went short. I figured, like, what if this thing could fill 50% of its gap, right? That's a huge score. It's a nice little score for me. Okay. So I took a shot. It didn't work. All right. My stop was above the high, but I was going to do a 2-bar stop rule, not a 1-bar stop. So, uh, boom, boom. That's the 1-bar. So that's the 1-bar violation of the high. And I said, okay, if it goes one more, I'm out. Boom. And I was out. Done, finished. But I had the Facebook save me, you know, with the $4,000 run. Okay. And that's it here. Now, I know, listen, guys, Dan is, let me get this thing back up here. I want, as there are a few guiding principles, right, that statistically will lead to better winning trades most of the time. And I know Dan and I break these rules sometimes, and maybe that's not always so good to put that in your face. But the thing to understand is that once you master the rules, you'll know through your experience of mastering the rule when it's okay to break the rule. You know? And so at first, you should really be trying to master the rules before you start figuring out those unique times that the rule doesn't matter. So what are those guiding principles? See this moving average here? Trade in the direction of the 20-period moving average. I am telling you that 80% of your losses are going to come fighting this. Now, I realize Dan took a few scalp trades this morning, I think, against the 20, and that's why they're scalps, right? You scalp against the 20. You don't trade against the 20 most of the time. There's a very big difference between a scalp and a trade, okay? So, but I will tell you that 80% of your problem will come by consistently fighting that direction, the direction of the 20-period moving average. Okay. The the other the other I'd say that the other rule, all right, the other rule is um, not quite as important, but still important. That your best buys are going to be above both moving averages. So your best buys are going to be not only above the 20, but above the 200 too, just like Facebook, above both moving averages. Okay? If you can keep the majority of your trades that way, in the direction of the 20-period moving average and above them both on the buy side. On the sell side, it's just the opposite, right? Okay, we can take AEP here. See, so now on the downside, your best plays are going to be in the direction of the 20-period moving average, which is down, and under both moving averages, right? And if you can keep those, you can keep the majority, not necessarily 100%, because we know there are exceptions, but if you can keep the majority of your trades in the direction of the 20 and longs above both moving averages and shorts below both moving averages, I'm telling you, the game is going to get easier for you. All right? The game's going to get easier. And this is a beautiful play here, right? That's what I wanted GLD to do today, but it didn't. That's what I was wanting it to do. That first negative bar, boom, slide. We didn't do that today. All right? You guys understand what I mean? Sorry about that. You guys understand what I mean? You got it? Okay. Guys, look at that narrow state. Look at all three of your items. Look how narrow you are. I told you your best trades are going to flow from a narrow state. All right? Best trades are going to flow from that narrow state. So isolate in the morning. There's not very much to do to prepare in the morning, but one of the things you can do is just pull out anything in your list of stocks that is starting the day from a narrow state. You know, wide states, as you know, tend to go the other way. All right. So if you look at Facebook now, we started from narrow, but look, now you're wide. Look how wide the distance from your stop to the 20, and now the distance from your 20 to the 200. Now you're going the other way. All right. You can look at the same thing in anything. You take a look at Apple. You've got now wide. Look at the tip of the stock here. Look at the distance from the 20. And then look at the 20, the distance from the 20 to the 200. This is a wide state. So wide states tend to, more often than not, go the other way. Okay? And that's why this weekend in my masterclass, I was teaching all the traders, you know, how once the stock goes wide, the color game is over. You don't want to play the color game from a wide state. All right? So you say, Oliver, look, this green bar took out the high of that red bar. No, because this is not a play here. Because you've already gone wide. It's a lower odds play. You want to play the color game, riding the color game, right, to the wide state. But once you get to the wide state, know that color games, the odds of the color game drop. All right. You can take the PayPal example here. So you see you're going from this narrow state here. You got the color game. Green takes out red, green takes out red. But look how it starts to get a little sloppy once you go wide. Right? So keep your states in mind. Know your stock's states. Wide. So you got 3 states really. Wide, moving. You have narrow and wide, but there's also a space in between narrow and wide. That's when your stock is moving, right? So you got the narrow state, then the moving state, then the wide state. So you got the narrow state, the moving state, then the wide state. 1, 2, and 3. Now a stock can work off its wide state. So a stock can get wide and then go sideways for a bit. And that solves the wideness. All right? That gives the moving averages a chance to kind of come together a little bit more. This solves, boom, the wide state issue, right? By marking time or going sideways. It's like anything else. This is the race. Now the runner gets a chance to rest. And now after a nice rest, the runner can go again. All right? That rest can be sideways like this, or that rest can be like this. Boom. Both can accomplish the same thing. All right? So, for instance, you've got Facebook is resting this way. See? Now, this later has the potential to do that because it's resting after having run this race. All right? But you take PayPal, and PayPal is resting this way. Having run this race, it's resting kind of this way. You see? So you can have the rest this way or the rest sideways. They both accomplish the same thing. Okay? Now, in most cases, as long as your rest stays in the top 50%. See, so I'm going to cut this race. This is a race. I'm going to cut this race in half. And if it stays in the top 50%. The rest is healthy. You see? If it breaks down, then it's not healthy. If it breaks down too far below the 50, then that rest is really not a rest. It becomes a breakdown. All right. And I'm always teaching you to cut everything in half, right? You cut everything in half, more or less. All right. Twitter. What's going on with Twitter today? Okay. All right. So look, Twitter goes from a narrow state. Here's the 20-period moving average. Here's the 200 and your stop all together, narrow state. We flow out of that narrow state. Now we're wide. Now we're going back to narrow. And that's all stocks do. Wide, narrow, wide, back to narrow. So you want to play out of the narrow state. And once you start getting a little more advanced, you play wide, the wide state. You play that reverse. Right? And that's those times when you go against the 20-period moving average. But first, you should be focused on mastering playing with the 20-period moving average out of these narrow states. Right? When is the exception to go against position and the moving average? Well, one of them is from a wide state. Well, almost all of them, all your exceptions are usually from a wide state. So let's say, for instance, how can I do this here? Maybe I can do it with the whiteboard, right? Let's see if this works here today. Whiteboard. All right, so let's say this. Let's erase this. So let's say, guys, check this out. Let's say this is your 200-period moving average. This is your 20. And your stock opens for the morning way up here. So this gap, and this gap up right here is actually born from an already wide state, right? It's born from an already wide state. This statistically drops more often than keeps going up after the gap. Okay? The reason for this is because in order to have a wide state, the previous day had to run up into the close. It's the only way you can have a wide state like this, right? So there was a power run right into the close on Friday, and Monday morning it gaps up. That rushes in sellers. Okay, boom. Most of the time. On the contrary, if you got your 200, your 20, you got a narrow state and the stock gaps, there's still good potential of continuation because it is being birthed. It's born out of a narrow state. And in order to have a narrow state, there was no run in the latter part of the previous day. So this still can even if the gap is big, it still has the potential to run. So you got to watch how What is the state that it is starting today? It's what my stock, what state is it starting its day from? Is it starting from a narrow state? Is it starting from a wide state? Because wide usually is opposite. Narrow usually is go with the opening direction. Okay? Does that make sense to you guys? Am I making that clear enough for you? All right. Love this game. Love this game. I love this game. Love it. Dan, what did you guys do this morning?
Oh, that Facebook trade you talked about. We used that little 5 minute bar and took that all the way up to the 5 minute 200, and then we did spies off the catch play on the 20. Once it took out the afternoon pivot from Friday at 322, and took that one up to Hoss.
I did spies as well. Okay, nice. Beautiful, man. Beautiful. Like it. Um, guys, do you know how long Dr. Dan has been with me? You guys know? How long? You guys know? It's crazy. 9, 20, more than 20 years. That's crazy, right? Crazy. Long time. Dan, when you when you came to be trained by me, right? How many people were in the in the training? Do you remember when you first came to be trained by me? Yeah, I think I had like 5 people or something like that. Yeah, I think it was like 5 people. Crazy. I used to keep my trainings back in the 90s, guys, in the 1990s. I used to keep my trainings under 10 people because I wanted that personal, almost one-on-one mentorship like experience, with the traders. Now, many of the traders would trade in my office. Like I had a trading office. I had trading offices all over the United States and then eventually in various parts of the world. I had a trading office in Japan, a trading office in Germany, Munich, Germany. I had a trading office in Caracas, Venezuela. I had a trading office in Canada. I had a trading office in trading offices uh, I had a trading office in China, Shanghai, and all over the United States. And my travel would be constantly rotating my time between my offices to give my traders that personal experience with me. And this is, of course, this was at a time when you needed to actually go to an office to trade because there was no way for you to get the data, the real time data. It was before you could do this yourself from your home, from a laptop computer. Every A lot of traders say, Oliver, man, I wish I started much earlier like you did. And I'm like, what are you talking about? You have the best of the best of the best right now. This is the very best time to start. It is not when I started is the best time. Nope. It is not the 1980s you should have started. It's not the 1990s you should have started or the early 2000s. No, it's today. Today is better than any day from my past. You have to understand that. The technology is better. Um, Platforms are better. Knowledge and the information is better. Reliability is better. Executions are better. You can do this with a laptop computer and an internet connection, and you're done. I didn't have that, you know? So don't think that the past was better. It's better now. That's for real. Negative comment. There's always going to be negative comments, guys. It's crazy. But I appreciate that. That's true, Manjit. It's always better now. It's very true for the most part. Although 2020 has been a really weird year for us. Weird in a lot of ways. Michael's saying, OV, your methods have been consistent over time since I first saw your pristine videos. Yeah, it's a long time ago. Long time ago. Nice. Yep, that's right, Dan. Markets don't change, traders. Just remember that. Why do markets not change? Because human nature doesn't change. And it's human nature that moves markets, right? Remember that. It's human nature that moves markets. I mean, your markets are predominantly moved by fear and greed. There's ambivalence and uncertainty as well, but the two dominant emotional states are fear and greed. So greed drives markets up, fear drives markets down. And as long as fear and greed are present in the human experience, you're going to have markets repetitively repeat the fear greed cycle, right? The fear greed cycle. And that fear greed cycle just creates this, guys, all right? And then you repeat greed, fear, ambivalence, and then you repeat, all right? That's all markets do. And if you look at this, it's just fear, greed, fear, greed, you see? And sometimes what makes it confusing is that sometimes one part is shorter than the other. So sometimes greed is longer than fear, and fear stops there. And then greed again. So here's the greed and here's the fear. Okay. And then sometimes it's the other way, right? Sometimes your greed is smaller than your fear. You see? So here's greed, and then here's fear. So they're not always equal. So these are your two scenarios, right? You've got this scenario, the even scenario. Then you've got this scenario, and then you've got this scenario. All right. 1, 2, and 3. This is your even no trend. This is your uptrend scenario, right? And this is your downtrend scenario. And that's it. Remember how I was telling you that stocks rest sometimes sideways? Boom. They can work off that wide state a little bit by resting, all right? Or they rest this way and work it off that way, right? All right, traders. You guys are my babies. Google Gaga. My babies. Look how cute you guys are. My babies. All right. Google Gaga. All right, guys, look, my babies, enjoy the rest of your trading day. Be safe out there. Do the right thing. All right. And always know I love you. I love you. I love you. Google Gaga. Ciao for now, guys. Boom.
God, that cracks me up every time. Laughing out loud. Oh, that's awesome. You just got to understand, man. Like OV is super intense guy, right? When we're doing our meetings and stuff, and then when we're out, he's just super fun loving. And that to see OV like that, like because I didn't know him when he had his little kids, right? When his kids are grown, and mine are still little, right? Most of his kids are grown and gone. He's got two more beautiful twins that are middle school already. So I missed the stage when he had his little babies. I never saw him like that. I can only imagine. Oh, it's killing me. I love it. Anyway, so to talk about, he was talking about wide state, just a different way to say the same things, right? Because right before he came on, we were looking at that AEP. So let me go back to this because I told you, stalk this thing, watch for this bounce at 80. If it holds and doesn't break down, 80 is a good reversal point, right? So just trying to follow up on what he was saying about when things go from narrow to wide, right? So at the start of the day, the AEP was, right, here's your 8, your 20, your 200. Here's your base on Friday. So it gaps and ignites out of a base, right? And there's this huge drop. Now, once it gets into I like call these extended states, right? He was calling it a wide state. So there's our first potential narrow bar, and it fails. Now look at it. You're getting price far from the 8, 8 far from the 20, 20 far from the 200. That's not the time to short. This is the time to look for the reversal. And at $80, that round number is a good place to do it. There's your failure to go lower, and here's your recovery from the wide state. And there's a nice little $2 bounce. And it might go up to, chance we can get to the 20 maybe, right? Because that was a really, really wide state. You might get to 83. So that's the one we were talking about right before. So it just the way it's taught in the manual, right, is this is extended from the 20, and then you look for a reversal. So remember we talked about the rule, trade with the 20 until you shouldn't. All right, that's the important part of it. Knowing when to trade with the 20, not now. Now you're not shorting anymore. You're too far. You're too extended. You're too wide. The move is done. Now you either skip the next move, wait for it to rally back and possibly sell set up again, or That's the rule breaking moment. So when Oliver just talked about market cycle, right? The fear, the greed, the despair, and it just repeats. When you become a seasoned trader, you don't care which part of that cycle you're in. You just want to know, well, am I on this part of the down cycle, right? It's a downtrending cycle, but I'm at the part where we're going to rally back into the next sell setup. That's all you need to know. So you can play a counter and expect it to roll for more trend, or you can play a counter expecting that it's going to reverse because of the other various things you're going to learn, right? Well, it's a true bottom, right? So in the beginning, it's hard because you're learning and you're supposed to stick with the rules. But then when you see us break it, you're like, well, wait a minute, that was a long against the 20. I don't get it. Yeah, well, there's more rules, right? There's rules that say when you don't follow rule one. So here's rule one, trade with a 20. Here's rule two, except when this happens. But if you try to skip to rule two right away, you mess up rule one and then you get it all wrong. Okay, so you have to be able to master the rule before you break the rule. Right? So why, like JP, this thing is going to go as 83. So I'm going to lock 82 on the trail, $2 in, and we're going to go for the big push here. So JPM, for example, this morning, right? We tried a short, we tried a long and then a short and then another long. Why did we not just stay short the whole time? It's under the 20. Well, you got other things to worry about. You got a daily 20, you got an hourly 200, you have no follow through to the downside. So that's not the time to sit here and just keep banging on a short and then this happens to you. Now you're all the way back up to the 20. If there's a sell setup up there and the 8 fails, you can look short again. That's 1 second. All right, we're back here. So there are times when it makes sense to trade with it, and there are times to know when to trade against it, or at least stop trying to force the trade with it. Right? So you trade. The key with that is location. This is the part that people mess up a lot. So yeah, you're trading under the 20 if you're shorting, but where? Not far away, right? The two key things to keep in mind is at or near. That's location. At or near or far away for reverse. So with the continuing, with the direction that something's going, with the 8, with the 20, with the trend, at or near for location items. Reversals, either failures, right? So a buy or sell setup at or near location that fails, now you're getting a reversal, or far away. You never want to do with the trend far away from the 8 and 20. So if you have AEP and you're underneath the 20, and you say, yeah, but we're supposed to be shorting, we're underneath the 20. Okay, but not here. What is this at or near now? Not the 20, not the 8. How far removed is this from the 20? Really far. What is it at or near? It's almost a pivot from a month ago. Like that's not the shorts. You got to be done for a minute. You have to expect a reversal at this point. Even if it's a 1/3 bounce, it's still going to be $3 or $4. So you can't say, well, I'm supposed to short. Not away from the 20. If you're going to short, you have to let it rally back. Remember, he drew a picture of market cycle, right? So you have to envision, okay, well, what's the next thing going to look like on the market cycle? So if we're looking at market cycle, if he's drawing that picture, right? We say, okay, cycles, here's just the basic wave pattern, right? Right, and that's all a market cycle is, whether it's going down with a wave pattern like that, or it's going up with a wave pattern, right? It's the same thing. So if we're supposed to see here's a declining 20, say, and you're like, yeah, we're in a down cycle like this. So I expect it to do this to continue. Okay, fine. But if you're at this part of the down move and you're extended, then you have to expect that to happen before that can happen and go further. So if you really thought it was going to trend lower, you don't start shorting it here after the first move. You have to see in your head, your mind's eye has to say, okay, that's the big drop, 3, 4, 5, 8 bars. It hits support. It's starting to bounce. Not the time to short. Or I'm like 15 bars down away from everything. Not the time to short. Even if I'm under the 20, that's not the location or the part of the market cycle to be shorting. So it's either play the reversal or take profit on the short and wait. So what a new trader is supposed to learn to do is say, there's the 20. I dropped, I rallied back, I'm at the 20, I'm starting another sell. That's your short. I get away from the 20, it starts to turn, I'm taking profits. It's back to the 20, it's rolling, I'm going to take a short. It's away from the 20 and turning, I'm taking profits. That's what a new trader is supposed to learn how to do. What does an experienced trader do? I'm away from the 20 and starting to turn, stop and reverse, I'm going long. I'm at the 20, I'm taking profits, then I'm going to short again. We're playing both sides of it. Or you come across the trade that you've missed. Look at that, to 83 in the background, AEP. You're going to see what it's like to ride a winner today, boys. Ride, Sally, ride. If you are away from the 20 and you just pull the chart up, the new trader goes, oh my goodness, look at this move. It's going to be a big one. It's away from the 20. I'm going to short. And they jump in right now. What does the experienced trader do? That was a really good move, but I missed it. So I'm going to wait for this reversal moment and I'm going to take that move. And then depending on what it looks like up here at or near the 20 again, I might take the next sell. Or it might be a failed sell and a reversal and continue, and I'll take it long again. So they're just playing whichever part of the cycle they're in. Where the new trader gets lost and goes, oh, it's under the 20, I'm supposed to be shorting at all times. No, that's not what he said. I was just sitting here when he said it. So when everybody comes back to me and goes, Oliver was on the open house and he said only short below the 20 always. He never said that. He said you should be looking for opportunities to short in the direction of the 20 if it's going down, and you should be looking for opportunities to go long in the direction of the 20 if it's going up. Not at all times. He then brought up the market cycle. He then talked about narrow states at or near MAs, not far away states. So it always amazes me when traders come back in, Oliver said this. Like, no, he didn't. You heard that, but that's not what he said. You heard the part you wanted to hear and you skipped everything else. You got to take it all in, right? You've got to apply everything together. So if this is the 20 and the stock has done this and you tell me it's a short, well, not down here it isn't. You can say, I want to short on the next available opportunity after a rally back and then a rollover, okay, and see what that looks like, but you can't short it here. You shouldn't anyway. Okay. Yes, it does. That's correct. With the gaps, absolutely correct. That's why I don't like gap trades that often. The gap trades are a pain in the ass. They're not worth the effort. Out of pure coincidence, what kind of trade burned OV today? What, just out of pure coincidence, one of the best traders you're ever going to watch trade. What trade burned Oliver with 35 years of trading experience? What trade got him? A gap trade. That's it. Enough said. Enough said. The man's been doing it for 35 years, traded more than you're ever going to trade from in your whole life. And even he got the gap and got it wrong. They're hard. Now, had he got it right, it would have been a grand slam trade, right? So he picked one, and that's what I try to do. If I'm going to do it, the payoff's got to be huge. He didn't take that as a gap because he was going to make a little $500 trade, right? He took that like, if I hit this, I'm going to make $5,000 or better. Like, it was going to be a big trade for him. And when it didn't work, did he stay wrong? No, he took it, got out. Right? And it's a good thing too, because it's almost at high of day right now. But my point is gaps are the most unpredictable, unreliable, pain in the ass trade you're ever going to do. So trying to do them every day, all the time, no. Every once in a while, if I see something off the chart that looks really good, I'll take a shot just like he did because it's worth it. Because if you get it, it's going to be a home run. But as a regular course of thing, it's the least important thing to me. It's the one of the last things I look for in the morning are gaps. Hate them. AEP with a fast track. Yep. Try. Look at the rally, boys and girls. Did I tell you this was coming? See, far away state, far away. Can't be thinking about a short down there. And right before we got on, I told you watch for 80 to be the hold. Oh, Danny boy. Dude. Almost to 84. That's a good 50% retracement, right? That's a solid rebound, better than a third. So I would lock 83 at this point, the $3 trail in place, and see if we keep going. But let's lock in the $3 trade for sure. Let it keep running. Let it keep running. Oh, you could take some or you could trail it, right? What if it goes 6 bars? What if it goes 7 bars? What if it goes 8 bars? What if it's 100% retracement? I have no idea where it's going to stop. So if you want to take profit at a target, take some. If you say, yeah, I think we're getting close, go to a 2-minute bar trail and let the market be the one to take you out. I'm locking $83, right? I'll let it keep going from here, but it's not coming back under 83 without me taking my profit. The $3 run, not giving that up. Could I guess right now and say, oh, I'll take 350 and say that's the top? I could, but what if I did that at 250? Would have been wrong. What if it goes to 84, 85, 86, 87? I don't know how far it's going. So until it shows me a reason to think it's going to stop, I'm going to just keep letting it go and keep riding it. Right? I've already taken some money and the rest of it gets to just ride as far as it can ride. Ride, Sally, ride. Hey, those of you that have not heard the story, because you're maybe not in the chat room yet. Like no joke, when I first went to to a training, I didn't know what I was going to. Like I was so new. I wasn't a trader yet. I was in college as a finance major. I was going to be a stockbroker, and the way the course was advertised. I thought, yeah, okay, this is just like training for investors and traders or whatever. And I still didn't understand what trading was. I had never seen technical analysis in my life. And I went to that class, and OV's got a white, the white flip charts, the paper, the big post-it pads, what do they call them, poster flip charts or whatever. They're like big 3-foot pieces of paper. Looks like a huge post-it notepad. He's got one of those on an easel. I mean, anybody under 30 probably doesn't even know what I'm talking about right now. They're like, I don't know what that is. It's not an iPad. I've never seen it. It's these big. these big flip charts, right? And you would draw on them, and then you'd flip the page over the top, and you would keep drawing on the next page, right? And it was there was a big easel at the front of the room, and he's standing there drawing these examples. Like, so he would talk about a concept, and he would draw a couple candles and say, "Now, if this one does this," and then he would draw, just like we did today in class, right? What I just did now with market cycle and what he was doing with wide and narrow. So imagine what that looks like right here for you millennials that have never even used or seen one of these things. This is what it looks like. Okay. This is a big, probably 2 feet, 2.5 feet tall, right? 30 inches or so. And then it's just you flip the page over. So you peel the bottom and you fold it over the top and it hangs behind it and you just go through all your paper and you keep drawing, right? So picture this. You're standing, you're in a seminar that you just paid a buttload of money to go to, and this guy comes out with a red and green magic marker and starts drawing rectangles on a flip chart. And I'm like, what the hell is he doing? Like, I swear to you, I had never seen technical analysis before, ever. I went through college degree of finance. Everything that I learned, there's 84. Dude, are you kidding me right now? Oh, Danny boy. So anyway, we're gonna lock this. We're gonna lock 83. Well, 8350. Can I get away with that? What's this 5 minute bar? 8375. Because we're right at 84. So this is that question. Do you just take it or you give it a chance to go to 85? Same question right at 84. So we'll sit on a 5 minute bar. So anyway, he's drawing these bars, right? And I'm thinking, what is going on? Because I've only seen like cash flow forecast models, dividend appreciation models, earnings per share forecast, earnings reports, projected present value, future value, all that stuff, right? That's all I'd ever seen. And this guy standing up there with two magic markers in his hand, like I'm at preschool, drawing rectangles. And I'm like, what the hell is going on? And I'm like, this is a joke. This isn't really the class. Like, he's just having some warm up time. He's just having some fun with me. And that's it, man. We go through 3 hours of this. And I'm like, and I'm looking around the room and I'm telling you, the other people there knew who he was, right? I didn't. Like, I didn't know. I was in New York. I was going to take the Brooks exam. I was studying for Series 7, and I saw this thing. I'm like, I'm going to go check this out. I had just got out of school, so I was all in that mode of education and learning everything you can learn. It was literally like a half hour away. I'm like, wait, I'll just go to this thing, right? I was like, this can't be happening. So I'm looking around the room expecting to see all the other people like really upset, right? Like I am. And dude, they're like entranced. They're taking notes. They're like writing stuff down. And I'm like, what are you writing? There's nothing to write. There's no notes. There's some rectangles on a piece of paper. What are you guys doing? And because I didn't know, right? I'm the one that has no clue. And I'm thinking that I'm the smart one and no one else knows what's going on. I'm like, all right, I'm in the wrong place. This is like candid camera or what? I don't know what the hell's happening. I got to get out of here. So at the break, I went up to him and I said, listen, I think I made a mistake. I think I signed up for the wrong class. He's like, oh, what did you think it was? I'm like, I thought it was a class on trading. I don't know what you're doing over here. And he started laughing a little bit. And he's like, listen, and he could tell I was young. I mean, I just got out of college. And that's the other thing. I was by far the youngest one in there. Everyone else had to be 35, 40 or older. And so I'm like the kid in the class, and he's like, "Yeah, listen, you're a little young for this. Because back at that time, it wasn't like today. Like he said, there was no, easy online access and open up your Robinhood account with $12 and buy 1/8 of a share of Apple. Like none of that stuff existed. You had to really trade and really have money and so there wasn't a lot of kids doing this stuff. So he's looking at me like, okay. So he goes, "What are you, finance or accounting?" And I look at him and I go, "Finance major, accounting minor." He laughed. He goes, "All right, so I got them both right." He goes, "It's not the first time this has happened. I'll tell you what." He said, "I don't want you to miss out on what I think is going to be a great opportunity for you to learn the other side of this thing. So why don't you do this? Sit through the weekend, and if you still think it's not what you wanted, if you still think it's the wrong thing for you and that you wasted your weekend, I will give you a complete refund." I was like, "Really?" He goes, "You can sit through the whole class, and if you truly think, nah, man, this is just all a waste of my time," he goes, "then you've exposed yourself to it because I know what you just learned in school. I was in accounting when he was in school. He was in accounting. So he said, just give me a chance. I was you once, and I know what you're going through." And I was like, "Yeah, all right, so be it." So I gave it a chance. I sat through it and walked out of there questioning everything I had learned in college. That's like, so now what? Either I just wasted 4 years on a degree that means absolutely nothing about learning how to trade stock market, or I just sat through a weekend of stuff that seems to be pretty spot on, and I'm in denial about what I'm seeing. Look at AEP refusing to stop. Oh my God, the shorts that are still short are crying. I don't understand what's happening. Oh, it's happening, sweetheart. Look at that little break. All right, so we're going to go 2 minute bar, 83.91. That's the new trail. Orange is the new black right there. 83.91. Actually, I have to make it 83.96. I do not want to lose this P&L target, so I'm trying to do the math here where I need to be. Now it needs to be 84. It's not going to work. All right, 80. I'll take it off right at the break, 84, guys. I'm not giving up this total. So I can't even sit on the test. So I am allowing the total P&L to override the technical right now. I wanted to give it a bar. I can't. If it hits 84, I'm out. Because I let it go through on the way up. I'm not letting it go back down. Um, so anyway, yeah, it's 11 o'clock here. Maybe we get to 11:15. So that was my crossroads. And I didn't decide right away. Like I just thought, I don't know. And I asked him at the time, I'll never forget this. I said, "All right, listen, man, I understand what you're saying, what you're doing." I said, "How much do you think I need in my account to day trade? Like I want to day trade my own money. I'm going to be a broker, but I thought a broker, I was going to get to trade other people's money. I didn't realize that you just taking phone calls for the most part. Found that out later. That's why I never did it. But I had just said out of curiosity, how much money would I need to trade my, and this was a while ago, right? Over 20 years ago. And he said, you probably want about $250,000. I was like, $250,000? Like, what the hell I need that much for? He said, well, you're going to blow through the first 50 pretty quick. Probably within 3, 4 months, you're going to lose that. And if you're lucky enough, you'll make the rest of the year on the next 50. He goes, and that'll give you at least 1 year of experience. So, you'll learn a little bit. And he goes, and then year two, hopefully you don't lose more than 50 that year. And that gives you 2 years under your belt. And then you'll have 100 grand left with 2 years of experience. You got a fighting chance. And I'm like, what are you talking about? Dude, like, that's your pep talk? But this was at that time. Leverage wasn't there. It was expensive. Commissions were through the roof. You burned through capital like crazy. right? So now maybe you can get away with that same plan with $50,000 and lose 10, and then go another year, lose another 10, and then hope you have 25 left in year 3. And or you prop trade and you don't lose any money. You get to practice and train and coach, and then when you're finally ready, you still get to take a shot on someone else's dime. And so when he said, people like, I wish I started when you started, and he started talking about how that's ridiculous, I agree with him. I would have much preferred not to have lost all the money I had to lose in the beginning and go through that. It would have been great to have the opportunity to not have to do that, but there was no other choice. There was no other choice. Brandon, I had not day traded back then. All I had done prior to that was move money around in a 401k type thing. A company, GE was a I was in GE financial training program. The day after I graduated, I started that program, and they used to put shares of stock in your retirement account. And you were allowed to move it between stock, money market, and mutual funds. That's it. So I had been doing that once a quarter. I would make a decision. All right, I want the money here. I want it over there. I want it over here. But that's not day trading, right? And I was doing that based on GE stock only, plus money market funds. And I thought I was all badass. Like I'm like, oh, the M1 money supply and the blah blah, and the Fed's forecasting this and the inflation rate of this. So I should put my money over here now. And I thought I was all smart and making these big decisions. No, the cars and motorcycles were after that. This was that was after I started trading. Once I started trading, um, it was about a year or two after that seminar with Oliver. I didn't trade right away. I went down the rabbit hole of reading every book I could get my hands on. Like I wanted to understand more about what is this mythical, magical, technical analysis they speak of. First, I wanted to see if it was just him. Like, is he the only one talking about this? Chris, because I have a chiropractic degree, so that would qualify me as doctor. I just don't practice it anymore. That was my second round of education, where I met my wife, which led me to have my two beautiful children. So apparently that was the plan. I don't know why else I was driven to go back to school, because I didn't do it very long and don't do it now. But you can't really plan it out. Just life happens, and you look back on it and say, never would have guessed that. Gonna marry a Trinidad girl who lives in Winnipeg, Manitoba. What? How's that one? How's that plan? You're in college. Hey, listen, you're going to meet a girl in Atlanta, Georgia. Now, I'm in New York at the time, right? You're going to move to Atlanta and meet a girl who was from Trinidad, who lived in Canada up near the North Pole, who went back to Atlanta to go to school. Really? That's where it's going to happen? Okay, that sounds likely. That sounds likely. Not. So, you can't ever think you're going to have total control over your plans. It's nice to make them, but, whatever, man. In the end, just whatever happens, happens, and you got to make the best of that situation. Sometimes start trading with the idea that you're going to retire in 5 years, and that's what I thought. Like I started day trading in the bull market of the tech bubble and thought, man, this is easy. 5, 10 years tops, I'll be out at 30. Cars, houses, boats, retired. This is cake. And then all of a sudden, bubble burst, and I realized I didn't know how to really trade. I just knew how to trade a bubble. It's like people that were making money in real estate in 2007 thought, real estate's easy. I got like 6 houses and I'm flipping condos everywhere. And, I have all these. I remember friends of mine telling me, I said, listen, you're on variable rate mortgages, dude. When those come due, it's going to be a problem. Like, just be careful. You're not over leveraging. I never foresaw what happening. I didn't think it would be that bad, but I was smart enough to know that 1.9 for the first 2 years sounds great until it goes to a 7-8% fixed. Like now you got a problem. You're taking 110% equity closeouts, and it was just not a good thing. But that I understood, right? That's the kind of crap I learned in school. So I understood numbers. That the tech bubble, I didn't understand how the stock market really worked. I thought I did and I didn't, and I paid the price for it. You know? So then the real estate bubble happened. Did well with that. And I don't know if you want to call COVID wasn't really a bubble, right? But we played the COVID collapse like textbook, right? Textbook. I mean, called the bottom within a day. I mean, played some stocks that have doubled or more already. So, that I don't know if you want to call it a bubble, but a severe move like that. So as you go through these things, you definitely learn from them. The first one that happened, I wasn't ready. I didn't know. I didn't know how to do it. Didn't know how to play it. I don't have any GE. I don't own any of it anymore. Um, Chris, yeah, when you're live, you can do it. If you upgrade to a fast track, you can do it. Your hands are tied. Hands aren't tied. You got 100 stocks to pick from. It's one trade on one day. Is Facebook part of the IFT 100? I believe it is, right? So you should have been able to place, there was a nice opportunity on Facebook. JPM's an IFT 100. I tried that today. Apple's an IFT 100. Tried that today. So this one's just a one-off. I'll probably never trade this stock again. I've never traded it before today, and I will probably never trade it again after today. So don't get too worked up about one stock. But there's ways around that if you want. Boeing, yeah, we picked up Boeing back under look, when the COVID happened, right here, Boeing was at a low of $89, and I told every single person in this room, buy Boeing under 100. Wasn't a secret. Wasn't like a paid trade tip. It wasn't a news. I said, buy Boeing under 100 and just wait. You'll be fine. And then Boeing proceeded to go over 200. It's a double. It's a double. All right. He said, buy the Dow Jones under 20,000. Every 1,000 points down, just start buying it. So buy 20, buy 19, buy 18. So guess where we bought the Dow Jones? Right here. 50% in 2 months. Buy big tech on the COVID crash. Facebook, Microsoft, Apple. Buy the big cap tech on the pullback. Well, let's see how they did. Let's see. Apple went from 215 to 400. That would be a double. Microsoft went from 134 to 200. That'd be 50% gain. Facebook went from 140 to 250, almost a double. So once you learn how to do this stuff, it doesn't matter if it's a 2-minute chart, a 5-minute chart, a weekly chart, you understand market cycles and you understand support and resistance and you understand percentage retracements and all. It's the same thing, whatever the time frame, you just adjust expectations for how long you think something's going to go. So 20 something years ago, I didn't understand any of that stuff and I lost everything trying to trade my way out of a bubble pop, and that was a very expensive way to learn. Not one that I wish I had to do. So now we get real estate bubbles and I'm like, yeah, that's great. Let's do this. Made money in the real estate and on the stocks. Then we get this COVID thing. I didn't play a lot of the last 2, 3 years prior to that because I was not heavily invested. Like I was a little concerned why the market was up so much. So I did miss a couple years there at the end, but guess what? Once this happened, I made all that back and then some inside of 3 months. So sitting out a couple of years and just not trusting the market, it's like, oh, you missed all that. Well, guess what? Got it all back and then some because I made the market. I didn't make it. I made myself wait for the market to give me what I wanted. Right? I didn't chase things up at the high. I didn't buy into things that shouldn't be up. So it just didn't make sense what was happening. I waited and waited and waited, and finally opportunity came. Cash heavy, load up. There it is. It's no different than a day trade. You wait, you wait, you wait. There's your moment. You strike. Right? AEP is no different on a 5-minute chart than COVID on a market chart. How's this? Here's a here. So, I mean, it's little because you got gaps and stuff in there. But look, weekly chart of the market, 5-minute chart of AEP. It's the same thing, guys. It's the same concept. It's the same concept. Okay, earlier, listen, I don't know if you guys were paying attention to these posts, but I want to show you. Vincent was looking at something, and I wanted to remind him of something. Let me repost this. Hold on. Okay, guys, check this out. 1040. So you don't have to scroll back through. I'll just clip the chart. Vincent said, hey, SPY's breaking out of consolidation. I said, keep an eye on Haas, which is the 15-minute 200, okay, and the 5-minute also. Right, I said, and I typoed real fast. So the 5 and 15-minute 200s are overlapping as the SPY's trying to break out of a 2-minute consolidation. And I mentioned that earlier. If you're just trading on one time frame, that you don't buy straight into something. So look what happened when the SPY's were trying to break out of the 2-minute chart. Look, doesn't that look great? It does. That's not. I'm not being facetious. That looks great. That looks like a breakout. Be super excited. Look at that. But what's on the 5? Ooh, there's big fat 200. What's on the 15? Ooh, ooh, and a whole number. Ah, so I have 323, 5-minute 200, a 15-minute 200. And breakout goes no place. Okay, so that's just experience of knowing you got to check those bigger time frames just to make sure it's not right in your face, which it was, right? That is the definition of that's right there. Like your breakout is literally trying to go through the 200 of the 15-minute chart. Your little 2-minute bar is doing its best. So how would I play that? Well, I'd either short the failure or I would let this get through. Like, okay, get on the other side of 320, 310, and we'll talk about it. But I'm not going to buy that and then just get slapped. Pretty good exit here on our AEP, right? We said 84, we were going to take it off. And there goes the rollover. Pretty good timing on that. So, did we get the absolute low? Nah, we got 80. Did we get the absolute high? Nah, we got out of 84. It's a pretty good run, right? That's riding the winners. 5-minute bar by bar trail. Very simple. Very straightforward trade. No, I didn't think of flipping, Jets. 11:30. I didn't. I don't know this stock at all. I've never traded it before. It had two really good moves. I didn't think it was going to have another, big move all the way down in trend. And at 11:30, I did not think about doing another trade. But could you have? The problem is the 8 is rolled right up underneath you. Now you got a hooking 8, so you'd have to be through the 8. By the time you're through the 8, the risk reward's not that great because down at the hourly 200 might be support. So there's your 2-minute trap under 84, right? So you get the buy set up. The 8's going to hook. It's going to trap. If that fails, then you break your 5-minute. So you'd be shorting here with a stop here. It's not that great a trade unless you think it's going to trend all the way back, which I don't. So that's why I didn't do it. Now, if it does, if it turns out that it will be a trend move, then yeah, take a shot. So could you try it and just say, look, I'm going to flip it, and as soon as I get one bar up, break evens in, I'm going for the home run. As long as you don't stay short, if it doesn't go down, it comes back at you. You don't want to get run over. Okay. The Haas is the 15-minute 200, right? So when we're talking about the spies, Christine, I said I would not go long on the 2-minute spy trying to break out when you have the 15-minute 200 right in front of you. I'm not going to go long into that. I have to be on the other side of that trying to break out. If I'm on the other side of the 200, now I have no more resistance. Right? Earlier we did Facebook, right? Took that long. Where? Up to the 5-minute 200. What happened when we got to the 5-minute 200? I said, well, we're going to take that out as target. Are we going to buy because we're above the 20? Not here, not 5 bars later, away from the 20 at the 200. That's not where we're going to buy. So if you said, well, we're above the 20, we have to buy. Well, we already did. We did that little give back narrow bar, made a $2 push, took our profit. So the next buy is going to be here. Now you're back at the 20. But what happened? Well, the 8MA is now going in the wrong direction. So you would have had to wait for this moment and then said, nope, can't do the trade. Or when you get more experienced, you might say, you know what? I'm going to short off that 200 and see if I can push it back down into the buy setup and make that trade happen. So what Oliver's saying is in the beginning, you should have done this trade, taken profit, and waited. You should not be trying these counters yet, but the experienced trader is going to. So you're going to see me do stuff like that all the time. I'm not going to skip a good opportunity. Chris, the five will smooth it out. The two can get whippy, and you got to be careful you don't overtrade. The five helps smooth it out. Sometimes the two gives cleaner signals than the five, and vice versa. But if you're having trouble on it, just move up a time frame or put up two. I know for some of you, trading 6 time frames at a time seems like a lot, but you have to remember that the hourly and the daily, you're not looking at those for more than a second or two. You're just looking to see, am I near support or resistance? No? Okay, then they're irrelevant. You're not like studying. So every time I've watched somebody give me a stop, Twitter, Dr. Dave, what about Twitter? All right. Oh, let me see. Pull up Twitter. The first thing I do is look at what is the 5 doing, right? I just want a quick, like an intuition look. All right, what's the 5 doing? All right, it's down a little bit. Bars are small. Then I glance to the right. Where's Haas? All right, we're through it. Any pivots? Yeah, right here. Okay. Hourly. Any pivots? Yep, right there. Same one. Daily? That's weekly. Hold on. Daily? Yeah, 20's way down here. We're in a sell mode. And whole numbers here. And that's it. I'm done. All right, let me go back to the 5. Like that's it. That's the extent of how long you should be studying these bigger time frames. They're not like, oh well, 4 days ago there was an igniting bar and there was a pivot up here that looked like a big bear 180 and maybe who cares? You're here on price. This is irrelevant for the 5-minute chart right now. This is relevant. I'm near a pivot, which is at 36. That's relevant. This, who cares? This, who cares? Doesn't matter. So you're not studying these things to the nth degree. You're looking, am I near something significant on a bigger time frame? If not, then it doesn't matter. If so, I want to know about it, and then go right back to your trading time frame. That's it, guys. It's you're not. So those of you that are getting all distracted, like, well, what's the trend and what's the? I don't care. What am I near right now? Anything significant on these time frames? No. Boom. Let's go to work here then. Right? You should be able to look at a bigger time frame and within 5 to 10 seconds be done with it. Should not be spending 10 minutes studying because every time you flip a signal, flip a symbol, you can't waste 15 minutes on an hourly chart. You'd never get anywhere. This does not look tradable, does it? Look at that garbage. That would be a severe lack of momentum. Green line, 8 MA. The 8, the 20, and the 200. Guys, it's 11:30. Market did fail up here to break out. It's kind of settled back a little bit. We'll see if that 15-minute 20 MA can give you some support there. But I'm not a huge fan of trading through lunch, as you know. I'm usually done by 11, 11:15. If you're going to trade afternoon sessions, they're usually better to trade between um, 2:30 and 4. That last 90 minutes, 11:30 to 2. It's okay. I mean, you can try it. Typically, that's when you'll have more problems. That's when markets tend to be more lackadaisical. You get more starts and stops, a lot of failed patterns, and just lack of follow through. They're called the doldrums for a reason, right? The midday doldrums, where it's like, take it or leave it kind of trading. The way I usually handle lunch, if you were going to try to do it, and again, I'm not a fan of it, I don't do it, is if I'm up on the morning, I'd give myself one attempt after 11:30. If that trade is a break even or a win, I could continue and try another. If that first trade is a loss, done. Do not trade until 2:30. Right? If you trade another one at lunch, break even or a win, keep going. The minute you take your first loss at lunch, no matter when it is, that's it, done. Just stop. If you're going to do it at lunch and you follow something that tight, you'll rarely create major problems for yourself. If you're down on the morning session, I would never trade lunch. 9 out of 10 times you're going to make it worse. And you'll remember the one time you made it better. You'll be like, yeah, but the one day I turned my whole morning around, man, that one day at lunch, I caught this move and this happened and that happened. And I came all the way back. It was negative, and then it was the greatest day of my life. Yeah, that was one day. One time you did that, and it sticks in your head forever. chop zone. Yeah, that's a good way to call it that. Yeah. The thumbnails. Well, I use the thumbnails. They're all set at 5 minutes. So if I see something that looks good, I'll pull it up into this main screen that has all the time frames. Or when I get posts from the room, right? When people post things in the room and I got to pull them up to look at it, it goes on this main screen that has all the time frames. So the thumbnail charts are just 5 minute charts. They're not 5, 10, 15 for every stock, right? I don't need to see all that until it's like the 5 is the filter. If it looks good on the 5, I want to see it. If it doesn't, then there's no need for me to be looking at it. So seeing it on the 15 isn't going to matter. Or seeing it on the hourly, it's not going to matter. It's a day trade, right? So I need to see it on the 5 or the 2 first. Make sure it looks good there. Otherwise, I don't want to do it. Chris, you took Lost Learning Fusion. No, you didn't hurt your chances. One, you could trade out of them over time. Two, you can always do a fresh start, reset the account, and go again. So it's not like you just killed your chance. Listen, everybody loses in the beginning. 99.9% of the people are not going to trade well when they first start. Trading's hard. Every now and then we get someone that comes in and walks through it like that, but usually that first month or two is tough. It's totally expected. No one's going to look at it and say, "Oh, wow, they can't trade. They've been at this 4 weeks. What the hell's wrong with them? 4 weeks and still not profitable." Like that's not even. It's more shocking when it's the other way. And it's like, wow, 4 weeks, that's it, and they're already up. I mean, that's shy. It usually doesn't happen. So the first thing I look at is like, all right, well, what did they do? Right? If I see a brand new account and the first month is significantly profitable, I instantly pull the detailed report. Like, what did they do? Did they get lucky and catch one gap trade? Did they, get lucky and do something at the open? Are they trading like gamblers and on a hot streak? Like, what's going on here? Because it's just not normal to see somebody in their first month rack up huge P&Ls. It takes time. And sometimes you can say you'll get a trader that just either has experience somewhere else, so they know what they're doing, or they just catch a bit of a hot streak to start. Trading looks fine, and maybe they're one of those people that's going to get it quicker than others. Right? There's the exception to the rule. I was not one of those that got it quick. I mean, I thought I did, but it took a while. Took some beatings before I figured it out. Robert, no, there's not like one stock where everybody makes money on it. There's not the opposite of that. Yeah, there's either stocks that like no one makes money and they're just really hard, or hey, these you have a fighting chance because there's more than enough people doing well with them. But there isn't like one stock I could say, yeah, everybody makes money on this one. The one where you don't make it, yeah, I can point out a couple of those where I see very few people have success. Brian, they didn't have this program, dude, when I traded. So I was already trading before this even existed. Um, I did go through this as an experiment. I've done it 2 or 3 times for people just to show them. And the last time I did it, I went through was it last year, guys? Do anybody remember? It might have been last year I did it. See if I can find it for you. And I did a sim account and went through it and traded it every day while I was doing my other trading. And these were the results. It took a month for me to do it. So this is the result history. Yeah, it was 19. It was January, February 19th. So here's week 1, week 2, week 3, week 4, and these are the totals. There's 3 grand. So I did it inside of a month, 4 weeks. But yeah, I've done it a few times over the last few years. This is, I think, the fastest I did it, and it should be, right? You get better as you go. I think the first time I did it in maybe 7, 8 weeks. Same with the second, just under 2 months, and then this one month. Let's see how that round trip average looks. Let's see how efficient Danny was. $3,000 of net, 3017 divided by 54.8 times 2. Ooh, 11 cents. Not bad, dude. Not bad. Some rock star trading right there. That's pretty good. Now, again, it's only 1 month, right? So, like I tell you, I told Garnett this last time. You want to look at that metric quarterly, every 6, 12 months. You do it on a day, it's useless. You do it on a week, it's A month is about the minimum because it's very possible the next month I did this, it might have been 3 cents, and now you got a 2 month average of 7 cents, right? And all of a sudden it's like, ooh, wait a minute. I don't know who just took my camera. Someone just took a whiteboard. So maybe someone's getting ready to do a lesson for you. Yeah, it says whiteboard. I don't know who did it. Are we getting ready to do a lesson? No, it might be. I don't know. Santi, you know anything? Oh, Santi's going to do a lesson. Nice. Nice. Yeah, he could do it in English. He could do his own lesson in English and translate it himself. So anyway, you can go through the program in as little time or as much time as it takes. And the question about what is average, there's no such thing. I've seen it done. We just this past month, we had 2 traders walk right through it inside of their first 3 months, just like clockwork. Boom, 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 done. And then the month before that, we had a trader that had been doing it part time for 10 years. So what do you want me to tell you? What's the average? There's no such thing. It takes as long as it takes. The worst thing to do is project how long it's going to take you. That's the worst thing. Now, Brian, that's useless information. That's not going to help either. Everybody wants to try to make this something it isn't. Because the market, here's the problem. If everybody did the same thing every time the way they were taught to do it and they were supposed to do it, we probably could give you some numbers. But when I tell you something like don't short this at this location, half the people short it anyway. When I say when you're up 2 to 1, make sure you don't turn that into a losing trade. Half the people turn it into a losing trade. So it's impossible to tell you how long it's going to take when I don't know how long it takes you to do things that you're supposed to do. I don't know your psychology as a trader. I don't know your stubbornness level. I don't know your aptitude to apply things that you're learning. Might take you forever. You might be pig-headed, arrogant, egotistical like I was. And it's going to take you a hell of a long time to get good at this. You might be timid and scared because you lost a lot of money before. Now it's going to take you longer to get through your fears. You might have no fear and be a just balls to the wall trader. Now it's going to take you longer because you got to tone it down a bit and stop loading up at the open at 9:31. Like there's all these different things that come into play that I can't possibly make a quote average out of. Can't be done. So how long is it going to take you? As long as it takes. I don't know. Well, what if I do it all right? Then how long is it going to take? I don't know. Well, what if I did exactly what you said? Then how long? I don't know. I can't tell you. Stop looking for that answer. Right? That's right there. If you're that kind of person, you got to figure out why you need to know that. Because that's going to come up in your trading. Your need to know before it happens is going to create a problem with your trades. You're trying to get the answer to something there is no answer to. And that's going to bother you as a trader and it's going to screw up your trading. So if you can't accept that risk, don't trade. Okay? If you cannot accept that you don't know how long it's going to take and it is what it is, you got to just suck it up and do it, and when it's right, you'll figure it out. But that's an unknown. If that bothers you and I need to know. 6 months, 1 year, 2 years, I need to know. And if you can't tell me, then I'm not doing it. Then guess what? Don't do it because it's not going to work. I'll just save you the time and the headache. No one can, anybody that's telling you otherwise, that, yeah, no, if you do this within 3 months, you'll be live. If you do that, and I don't mean here's the parameters. I mean, they're promising you, no, you learn this and you'll be making money in 6 months with our method. Anybody's telling you that, run. No one can tell you, even if the method worked that well, you'd screw up the box they gave you to play with. So unless they're letting you buy a piece of the algorithm that's going to run unattended by you, you're just paying to have it run somewhere else and you get a piece of that black box profit. That's about the only way that could work. So anyway, guys, are we coming back tomorrow? Do we know? I got updated on this at 9:27 this morning when Oliver said, "Hey, everybody's coming to your room today." That was that was the extent of it. I was like, "Okay." So we're doing it again tomorrow? Yes, Leona. Yes, we are. Okay. Open house tomorrow. All right. So we'll do this tomorrow. I know you guys will be here again, and yeah, the alert about you got that alert today. Okay. So we'll do it again tomorrow, and then tomorrow what I'll do is I'll do like a formal wrap up Q&A type thing for you at lunch because I was not ready for this today, and I cannot stay here through lunch today. Bill would usually jump on right about now and had an emergency thing come up this morning. Everything's okay, not, but it was a true emergency that he had to deal with. So he's not here right now. All right. So tomorrow, if he's not able to be back on, I'll stay a little bit longer and go through lunch, and I can do more stuff with you in terms of any kind of education you guys want to go over, or take a lot of Q&A, program questions, program review. We'll use tomorrow as I was gonna do a little today, but I didn't want to rush it. But if we do have all day tomorrow again, then that's even better. We'll do another open house tomorrow and we'll roll through it. All right. So again, I don't trade through lunch, guys, and I don't recommend it. I usually would use it for education or training. So we can do a little bit of that tomorrow. Day ended up pretty solid today. All right. Here's how we finished up our day. Couple of scratches with Apple and Wellesley, but the AEP was by far the home run. A solid trade on Facebook, a little scalp on JP to start, and then good trade on the market. So this was by far the home run trade. But how often are you going to see a stock drop $12? They're hard to find. So if you take that out, it'd be more of a normal looking day, right? Take this out, just say you're not going to find that tomorrow. So you're left with, $1,000 trade here, $500 scalp, an $800 trade there. I mean, that's a solid day. This is just, a fluky home run. Not going to find those every day. But the real key is when it doesn't work, you recognize it. Remember when I said Wells Fargo, we could look short, but then the market started to rally, and I said just cover it right now. I don't like it. The market's rallying. It's hard for the banks to drop, so you just get out. even if it's not quite your entry, right? It doesn't matter. Just get out. Apple, I'll show you that trade because it was, again, before Oliver got on, but let me show you what happened there. It was a good looking trade. I really, really liked the trade. It just didn't work, right? Guys, this is a great look. Igniting bar, ribby, whole number, above the 200, 15-minute 200, way the hell up here. I got nothing to worry about. Daily chart in a buy setup, right? Gaps down, trades over the high, 8MA's way up here. There's nothing not to like about that ribby. That should be able to go $2, $3, $4, no problem. Everybody loves Apple. Every fund buys Apple. That's a good solid look. And what happens? When that triggered, I thought 382, 383, like this thing is going to rock. And I told you, get your break even in. What happened? No follow through, comes back to the entry price, and then just gives up. So does that mean that that's a bad pattern? No, that's a fantastic pattern. I'll trade that tomorrow if I see it again. And I'll trade it the day after that. And every time I see that look, igniting bar, ribby, above resistance with wide open space, I'll try that every time. But when it doesn't work, I'll be out every time. I'm not going to sit there and watch it turn into a full loss when I can recognize right now it's not working. So I'm getting out of break even. Not, oh, but it's a ribby, it's supposed to work. Oh, it's a 90 bar, it's supposed to work. Oh, it's above the 200, it's supposed to work. Yeah, there. Oh, damn. I just took a full L. 7 bars later, I just took a L. No, no, no. Don't do that. Don't do that. Look at it. You still be in there holding and hoping and praying, and maybe it'll bounce, and I hope it comes back. And it was such a good bar. Dude, it didn't work. Move on. Get over it. Get over it. Yeah, no, I get out with alt 1, alt 3. I'm probably just getting out faster than you are. That's all. You're just waiting longer. I'm hitting at break even. So in other words, that's a break even. That's supposed to be a zero loss. Right? And they're not always quite that good. Sometimes it'll be $50 or $70, but it's not 300. Right? It's not $300, $400 of loss. Cutting them off quick. They're not working out. All right, guys. So tomorrow we will do. You held it too long. The AEP. Yeah. Well, that's good lesson though. The next time you won't hold it so long. But seriously, this thing fell how far? From 88 to under. It's an $8 drop. We're on it, so it's a 10% hit on the stock intraday. Not a gap. Didn't gap down 10%, which happened to Intel last week, I believe. Right? I think Intel took a gap down like that. Yeah, Intel gap down almost 15%. See that? Earnings miss. Boom. Gaps down $10 on 60. So a little over 15% gap down. This thing traded from the open and dropped 10% during the first 30 minutes. Like that's not normal. You're not going to find a lot of those. All right, guys. So that's it for today. Glad you're here. Glad we're doing this. You know, I just didn't know about it. I know others knew. I just didn't know, but more the merrier, no problem. Glad everybody was able to make it in, and we'll do it again tomorrow. Like I said, Bill would typically be here for an afternoon chat. He's not. So for the rest of the day here, I think we're going to be done with our event for today, and then we'll pick it back up tomorrow. All right. So I hope you enjoyed it, and if you got questions that I didn't get to today, save it for tomorrow. Come back here, and we will do it again. And then, like I said, tomorrow afternoon I'll be more prepared for it and do a whole Q&A and whatever you want. Sound good? Good plan. Andrea, good plan over there. Spanish room ready? Happy? Everybody's good? Invite a friend. Okay, Garnet, you can invite a friend. You're more than welcome. Yeah, just email. There should be a link for them to register at it. If you can't find it, if you send an email to Jack in admissions, just email Jack at iFund Traders and say, hey, I want to bring somebody to the event tomorrow. He'll give you an access link. Jess, I think so. I did the upgrade this morning real quick because it was 4. Enjoy the rest of your day. Take care.